Hello traders, John Hyaden here with a daily revision. Let us begin. Before we start, I suggest you stop the video and read the general risk warning. It is very important for your knowledge to understand the risks under trading. Starting as always with upcoming events, all events are taking place in GMT hours. I recommend you write the events down in your calendar so you would be able to trade and notice them before and after the announcement. ECB, the European Central Bank, will talk about the monetary policy and the quantitative easing plan they have for Europe. What goes in Europe right now is basically that unemployment rate went down. However, it stands higher than 10%, which is still pretty high compared to the number in 2008. In conclusion, the speak will probably cause some volatility among pairs related to Europe, such as the euro, pound, and the Swiss franc. API weekly crude oil, important announcement for the oil. I will talk about it in the commodity sections of the daily revision in a bit. US market positive close on Monday due to the great feeling among traders from October and the fact that most announcements related to the economy seemed better than expected after analysts scared us with the slowing global growth. The situation leads the traders to join the end of the year rally since no one wants to miss the opportunity. However, it is important to understand that whatever goes up must go down as well. Short-term trades will be a better idea as we're also getting closer to the past resistance area, which may lead for possible correction. Furthermore, it seems like traders don't really believe the Fed will increase interest rate, although some strong hints about it sent over in the last speech. Be sure that smart and patient traders don't hurry to enter the market now. Usually when we see the bandwagon effect that the rally is about to end, since smart money knows how to pull its profits at the top highs. In conclusion, long-term trades are not highly recommended right now, as we expect correction and volatility should get higher along the week, closer to the unemployment rate decision on Friday, which may give us stronger clues on possible rate hike decision for December. As you can see below, this is the SP 500 weekly chart. We're facing here almost 1, 2, 3, 4, 5, and not over yet the 6 candle or 6 week of a rally, and we just got hit by the last resistance area. You can see the trend line over here. I believe we should bound and make a small correction before we move further on. Earning reports, we are still in the middle of the third quarter report session. Here I will keep you updated with important events. These reports will either help the market to reach higher highs or it will cause hard time for traders to set a direction. Well, today not a lot is expected. Focus on positive feeling in the market when you trade short-term trade stocks. If you want to see who is reporting every day, you can write on your Google earning report calendar. You will bring up detailed charts with upcoming events. Commodities gold keeping its downward rally toward the last support area. The seller's strength is getting weaker, which is a good sign for a comeback. However, uncertainty is still on the line as most investors highs now look forward to the Fed's interest rate decision and the unemployment rate on Friday. It is a bit riskier, but according to analysts, it is better to trade in favor with the gold than against it, since we are sitting on a support area that usually the price bounce there. Crude oil, as I promised, showing great performance under pressure, not showing any direction right now, but the resistance level, which is the 100 moving average, is now making the buyers weaker. Today, API weekly crude oil will take place. Poor results in production will increase the price of oil, and who knows, maybe we will see a breakout of the last resistance, which may lead for higher highs. So if you want, you can see in the graph from the left, this is the gold after a long rally downward towards the support area here, the 100 moving average. We should see a bounce over here because we're actually, you can't see it, but we're inside a correction area. And from here we should see a bounce towards higher, at least toward the resistance over here. It's a bit riskier, but you can take the risk if you're willing to. From the right, you can see the crude oil. We just stopped for a few days on the resistance area here, and I think today's API crude oil will set that direction if we will break this resistance higher, or maybe with good production results we should see downward movements towards the support over here. That's it for today, guys. Hope it was useful for your trading and knowledge. My name is John Hyaden. You can contact me on binaryoptionsreview@gmail.com, and I'll see you again tomorrow.